It's Andrei.Hall, America's retirement asset distribution professional.
I take great pride in going above and beyond for my clients and utilizing strategies to maximize what you get in retirement while at the same time potentially minimizing taxes to ensure your money will last.
And here's Andrei.Hall, America's retirement asset distribution professional.
I'd like to take a few minutes to explain something that doesn't apply to everyone. However, if you're watching this, it must apply to you. It's very important. It's called WEP, which stands for Windfall Elimination Provision, and GPO, which stands for the Government Pension Offset. These two provisions apply to individuals who worked in non-Social Security covered jobs that did not pay into Social Security. For example, some school systems have their own retirement systems. The teachers contribute to those systems instead of paying into Social Security. Same with some government jobs. Usually you'll know if you didn't pay into Social Security. The FICA tax withholding that the rest of us see on our pay stubs wouldn't appear on yours. Instead, you would see contributions to your employer's own retirement system. You either wouldn't get a Social Security statement, or if you did, your earnings from the non-covered job would not be listed. The vast majority of people do pay into Social Security. So the WEP and GPO do not apply to most people. Lately, a number of my clients have been in this situation who are close to retirement. One situation in particular was so rough that it made me decide to dedicate a substantial amount of time and energy to this area. You'll walk away today with how your Social Security benefits may be affected and a personalized, comprehensive Social Security WEP GPO planning report. This report shows the Social Security benefit stream you can expect to receive under different claiming scenarios based on your primary insurance amount as estimated by the Social Security Administration and certain assumptions for life expectancy and future cost of living adjustments. First, we have the WEP, the Windfall Elimination Provision, which applies to people who worked in non-covered jobs in which they did not pay into Social Security and who also qualify for Social Security as a result of working in a covered job. Under the WEP, their Social Security benefits may be reduced. Normally, when the Social Security benefit is calculated and the 3 bend points are applied to the average index monthly earnings, the first tier of earnings is multiplied by 90%. This is to give greater weight to that first tier of earnings. But if you're receiving a pension from an alternate retirement plan, your first bend point will be multiplied by anywhere from 40% to 90%, depending on how long you worked in the Social Security covered job. If the Social Security covered job was not your main job, say you worked less than 20 years in it, your first bend point will be multiplied by 40%. Conversely, if the Social Security job was your main job, you paid into Social Security for more than 30 years, your benefit won't be reduced at all, even if you received a pension from a non-covered job. Here is an example of how the Social Security benefit is calculated for someone who is not subject to the WEP. First, the highest 35 years are indexed and average. In this example, the AIME is $11,430. In calculating the primary insurance amount, 3 bend points are applied to the AIME. The first bend point is multiplied by 90%. This gives greater weight to the first tier of earnings. The Windfall Elimination Provision affects that first bend point. Instead of multiplying it by 90%, it may be multiplied by as little as 40%. This has the effect of reducing the total Social Security benefit. The maximum WEP reduction will vary with each age group because it affects that first bend point. The bend points change each year. For someone born in 1960, The first bend point is $1,024. For someone born in 1959 or 1961, it would be slightly different. For someone born in 1960 who receives a pension from a non-covered job and who worked less than 20 years in a Social Security covered job, the first bend point is multiplied by 40% instead of 90%. That's a difference of 50%. So the maximum WEP reduction would be $512. So if this applied to you, and if you were looking at your Social Security statement and saw your benefit was, say, $1,200 because you have worked less than 20 years in the Social Security covered job, your actual benefit would be more like $688 after subtracting the $512. Now remember that you are getting a pension from the other job, so that should help make up for this reduction. I can't tell you the windfall elimination provision is fair. I can only tell you, quite frankly, that's how it works. Once the formula is adjusted to determine the WEP-adjusted PIA, this is used to calculate the worker's own Social Security benefit. The reductions or credits will be applied to this amount depending on age of application. The WEP-adjusted PIA is also used to calculate the spouse's spousal benefit. If the spouse applies at full retirement age, the spousal benefit will be 50% of the WEP-adjusted PIA. The WEP reduction is removed for the survivor benefit. So if the workers whose PIA was adjusted for the WEP dies, unfortunately, that WEP reduction will be removed when calculating the survivor benefit for the surviving spouse. Of course, that spouse may also receive a survivor pension from the worker's non-covered job. I mentioned earlier that you had to have worked in a Social Security covered job for more than 20 years to reduce or eliminate the WEP. Well, it can't be just some little job that didn't pay much. You have to have what they call substantial earnings in the Social Security covered job. Here's the table of what they consider substantial earnings, roughly $20,000 a year or so. The government pension offset also affects people who worked in non-Social Security covered jobs and who will be receiving a pension from that job. But the GPO affects spousal or survivor benefits. So let's say a teacher in California or Texas or one of the other 15 states who have their own retirement system never worked in a Social Security covered job, so they don't have their own Social Security benefit. But their spouse has always paid into Social Security and qualifies for a benefit of, let's say, $2,000 a month. Can the teacher file for a spousal benefit and receive 50% of their spouse's benefit? Under the GPO, the spousal benefit will be reduced by 2/3 of their pension amount. So if their pension is $2,400, 2/3 of that is $1,600. This is more than a $1,000 spousal benefit, so they would not be entitled to a spousal benefit. Again, I'm not saying it's fair, just how it works. Now keep in mind that survivor benefits are higher. They equal 100% of the worker's benefit. So if the worker's spouse is receiving $3,000 when they die, and the teacher's spouse pension is $2,400, 2/3 of that is $1,600, which is less than the $3,000. So after the GPO, they would end up with a monthly survivor benefit of $1,400. Sometimes people receive their non-covered pension as a lump sum. What happens then? How do they calculate the 2/3? The Social Security Administration has it all figured out. They will refigure the lump sum as if it had been received as a monthly annuity. They have formulas for this. Then they would calculate 2/3 of that amount. Also keep in mind that the GPO doesn't start until the pension starts. This is usually at retirement. So it might be possible to receive a spousal or a survivor benefit for a few years if you're still working. Then when you retire and become entitled to a pension, the GPO reduction would start. Sometimes people ask, how does the Social Security Administration know you are receiving a pension from a non-covered job? The answer is, you tell them. When you apply for the benefits, they will ask you if you are or ever will be entitled to a pension from a job in which you did not pay into Social Security. It's important for you to be honest when dealing with Social Security. There have been many cases where the WEP or GPO was never applied, either because the person wasn't honest or was confused. Once the Social Security Administration found out about it, they went after all the overpayments. In many cases, it was many thousands. You don't want this to happen to you. You should know what would happen if you were to claim early, at full retirement age or later. You should also know your maximum lifetime nominal benefit, the cumulative benefit comparison, and what the first full year of income for the surviving spouse would be. When you know this, there's no need to guess. You'll eliminate missteps in your plan and be able to lead a comfortable life with fewer worries. However, I know that having someone do this plan for you will cost money. Earlier, I said I pledged to dedicate my time to service, and I meant that. Since WEP GPO applies to you, I'm going to give you a WEP GPO planning report complimentary. This report is not generalized. It is customized to you and your situation. So I will need you to answer a few questions and for you to know your WEP. If you don't know your WEP, I've laid out the steps to attain your WEP from Social Security Administration. Just click on the link attached with this video for those steps. While you are on that link, there will be a section to enter your email address to receive an email containing the secure questionnaire needed for me to complete your complimentary Social Security WEP GPO planning report. This report is not auto-generated and requires someone in my office to do the legwork. After the report is ready and I personally overview it, one of my client associates will email it to you. This can take 48 to 72 hours since it is not auto-generated. I know you'll have questions regarding the report, and you will be able to schedule some time with me, complimentary, to receive answers to those questions. I hope you enjoy my gift to you. I look forward to speaking with you soon.